For sale signs are staying up for months, sellers are slashing prices, and buyers, they've disappeared. What's happening to the American housing market? And is this the start of another collapse? You open with that punchy line to seize attention. Then you continue. In many U.S. metro areas today, homes listed for sale stay on the market for far longer than expected, sometimes months longer than in previous years. In several cities, home sales have plunged by 30% or more year over year as buyer demand dries up. In Phoenix, Austin, and Las Vegas, realtors report that price cuts are now routine, not rare. It raises the emotional question: if nobody's buying, what comes next? Is this a mild market cooling, a correction, or the beginning of a full-blown collapse? Will people who bought at the top be left underwater? Will foreclosures rise? The fallout is already in the numbers. Nationwide, existing home sales have slumped to some of their weakest levels in decades, even approaching lows not seen since the 2008 financial crisis. For example, in mid-2025, the annualized rate of existing home sales hovered around 4 million units, a sign of profound weakness given population growth and prior housing demand. Some forecasts warn home sales could fall to the lowest point in 30 years if current trends continue. The key culprit behind this freeze? Mortgage rates. After years of ultra-low borrowing costs, rates have spiked. As of late 2025, the average 30-year fixed mortgage rate is about 6.3% and has flirted with 7% or higher in recent months. A home that would have been financeable at 3 to 4% a few years back now comes with dramatically higher monthly payments. Let's make it concrete. Say someone wants to buy a $400,000 home. 2 years ago, with a 3.5% mortgage, the monthly payment, principal plus interest, might have been around $1,796, excluding taxes, insurance. Today, with rates approaching 6.5%, that same home demands a payment closer to $2,528 or more, over $700 extra per month just for interest. That's money many middle-income households simply can't afford. Because of these cost jumps, many first-time buyers are frozen out. Their income won't qualify them, or their debt loads are too high. Even others who can afford it are choosing to wait, hoping rates will drop or that a better deal will come. This has pushed housing affordability in the U.S. to levels not seen in decades. Some analysts say it's as bad as it's been since the early 1980s in terms of the ratio between housing cost and average income. While buyers are stepping back, sellers are finding themselves trapped. Millions of homeowners locked in ultra-low mortgage rates during the pandemic years. Rates as low as 2.5% or 3%. Now, with new mortgages hovering around 7%, selling their current home means giving up that cheap financing and taking on a payment that could be double what they're paying now. So most are choosing to stay put. Economists call this the lock-in effect. That's why the number of homes for sale has plunged. Not because the country lacks houses, but because nobody wants to sell. The few that do list their homes are realizing that buyers aren't biting. In many cities, listings now sit on the market for 30, 60, or even 90 days, far longer than the bidding wars of 2021, when houses sold in a weekend. To attract attention, more sellers are cutting prices. Some are offering to pay part of the buyer's closing costs or throw in renovation credits just to make the deal happen. In cities like Austin, Phoenix, and Las Vegas, which saw some of the fastest price booms, sellers have been forced to drop prices by tens of thousands of dollars as demand collapses. Even real estate agents are feeling the chill. Transactions are down, commissions are shrinking, and open houses that used to draw crowds now see only a handful of visitors. What was once a red-hot market has turned into a waiting game. Homeowners waiting for buyers, and buyers waiting for prices or interest rates to fall. For the first time in years, both sides of the market are frozen in place. It's not a shortage of desire. It's a shortage of affordability. And until that changes, America's housing market may remain stuck in this strange standoff. For years, Americans were told that owning a home was the ultimate sign of financial success. a cornerstone of the American dream. But in today's market, that dream feels more like a luxury. The problem isn't just high prices or high interest rates. It's both, hitting at the same time. Even though prices have started to soften in some cities, the cost of borrowing money has climbed so much that the total monthly payment for most homes is still out of reach. A small dip in price doesn't help much when mortgage rates are near 7%. It's like lowering the sticker price on a car while doubling the interest rate on the loan. The payment still ends up higher. First-time buyers are feeling it the most. Many are discovering that they'd need to earn $100,000 or more per year just to afford a modest starter home in many metro areas. And that's assuming they can even save for the down payment, which has become another huge hurdle. Rising rents make it harder to save, while inflation eats away at whatever's left in people's bank accounts. Meanwhile, renters are stuck too. They can't afford to buy, but rent prices haven't come down meaningfully either. It's what economists call a trap. People are caught in the middle. They're spending record portions of their income on housing but can't move up or build equity. And here's the irony. The housing market isn't short of homes. It's short of affordable homes. Builders have focused for years on larger, higher-end properties because that's where profit margins are strongest. So the affordable segment, smaller homes, entry-level houses, simply hasn't kept up with demand. The result is a generation of Americans frozen between renting and buying, watching from the sidelines as affordability collapses to its lowest level in decades. For many, the dream of homeownership isn't just delayed. It's slipping further away with every rate hike and every missed opportunity to buy. Even if people could afford to buy right now, most simply don't want to, because the economy feels unpredictable. Every headline screams about inflation, layoffs, and the Federal Reserve's next move. When uncertainty rises, confidence falls, and the housing market is built on confidence. Think about it. Would you take on a 30-year mortgage when you're unsure if your job is safe or if prices are about to crash? Many Americans are choosing to wait, scared of buying at the wrong time. They're worried that home values could dip, leaving them owing more than their house is worth. A painful memory from the 2008 housing crash that still haunts millions. Even sellers are nervous. They see prices starting to slip and wonder, if I list now, will I get stuck lowering the price later? So they hold off too, adding to the slowdown. It's a classic chain reaction. Fear feeding hesitation, hesitation freezing the market. And the Federal Reserve's fight against inflation isn't helping. To cool the economy, the Fed keeps interest rates high. But those same rates make mortgages expensive and loans harder to get. It's like trying to slow down a speeding car by slamming the brakes. But passengers, in this case homebuyers and sellers, get thrown forward in the process. Then there's inflation itself, groceries, gas, insurance. Everything costs more. Even families who might qualify for a mortgage on paper are thinking twice because their monthly budgets are already stretched thin. When your grocery bill has jumped 20%, that extra $700 a month for a mortgage suddenly feels impossible. So it's not just a housing market problem. It's a confidence problem, an economic anxiety problem. People aren't just asking, can I buy anymore? They're asking, should I buy right now? And increasingly, their answer is not yet. So where does the housing market go from here? If mortgage rates stay high, sales could stay frozen, maybe even fall further. But if the Federal Reserve eventually cuts rates, we might see a quick rebound as pent-up demand comes rushing back. Still, prices may not crash the way some hope. There's simply not enough supply for a full collapse. But affordability could stay painful for years unless wages catch up or rates drop meaningfully. For now, the housing market sits in limbo. Too expensive for buyers, too risky for sellers, and too uncertain for anyone to feel confident. So whether you're thinking of buying, selling, or just watching from the sidelines, one thing's clear. America's housing market is changing fast. It's not 2008 all over again, but it's also not the easy money boom of 2021. It's a new reality, one where patience, planning, and timing matter more than ever. If you found this breakdown helpful, Make sure to hit that like button, subscribe, and share this video to help more people understand what's really happening in the housing market. And tell me in the comments, would you buy a house right now or wait until rates drop? I'm reading every response, and your take might even show up in my next video.